Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, 22nd day of April, 2015, and this is the daily report for gold and silver. We have a dramatic sell-off across the board in the precious metals markets, with platinum leading the way in terms of percentage sell-off. Platinum down about $20 currently, trading well below gold. Gold off by about $15, $16 on the day. 1186, 1187. That's off of a low of 85.30, so we're just off of the low. High 1204 even on the day. Silver also under pressure, off almost a full 1.5%, about 23 cents lower on the day, well below 16. 1580, that is our current print. Silver has had a low of 1565, so we are close to the low, and the high 1607. We'll touch on silver in just a little bit. Absolutely no doubt, on a technical basis, today's downside move is significant. It's significant in a couple of ways, but one of the things that we've been looking at over the last couple of weeks has been the dual level of support in the market at 82 and then again at 92. Now, these are based on very, very short-term Fibonacci-based studies looking at this rally from 1141 up to 1223, and then the subsequent retracement of that market. We hit this low back, call it a week and a half ago, in which the market actually tested 82 but bounced right back off of it. Since then, though, the market has been able to, on a closing basis, maintain a price point above 92. And the reason that I say a closing basis is we have had a couple of lows that have gone in, or at least this one low that's gone through this point, and quite a few points that have gone to this point. But today's move dramatically shows you that support right now has not held at 92, and the real question is whether or not it will hold at 1182. As you know, overall, I've been bearish on this market, and I believe that a break below this point, meaning 1182, should take gold prices at least to, I'll call it 1170. That would be the first level that I would look for if this particular level of support is broken, and I believe that there is a high probability that that might occur. We've got this level of support here, and then of course we have our lows that are sitting here at 1130. These are the record lows ever since the market has fallen from 1920. This right here, traders, is the low point in which we have seen the price of gold ever since that point, meaning what, mid-2011 into 2012 when that fall began. So traders, we're looking at gold at a fairly significant and critical level. If it cannot hold 82, and my sense is that it probably will not, the next real target that we should see gold move to, as I said, is going to be around 1170. At 1170, we do have this prior low at 1141, and of course this I won't say all-time low, but all-time low ever since the price hit 1920 and began to track lower at 1130. So those are the particular areas. A break below 82 on any significant basis, and traders, I recommend that you actually initiate short positions. You can do that with a price order. In terms of the kind of break that we'll see, if we get any kind of a hard break, you'll want your stops above this point, 85 to 87, somewhere in that area. We also want to look to see what happens with this MACD, because as you know, we've been looking at two potential models, because as this market's really been trapped in the sideways range, we looked at the possibility of market moving up, moving sideways a little bit, and then back higher to the top of this scale here, as opposed to selling off midpoint, which is what in fact we could be looking at. Now, the selling that occurred in the market today was absolutely technically based. It was based on some strong housing data that came out in the U.S. markets. We had the Standard & Poor's return to near their record highs. Oil, in essence, unchanged on the day, $1 a little bit higher. When you look at trading activity, though, today, you had a strengthening dollar or excuse me, you had the dollar itself only accounting for a negative 60 to 80 cents in the market. In other words, there was strengthening, but it was very, very slight. So it really didn't influence the market a whole lot. This is pure selling that we're seeing within the marketplace itself. So traders, what a difference a day makes. Yesterday I talked about the possibility of looking at a couple of option plays in which we were going to actually write options. And that was because of the fact that we were unable to, over the last couple of weeks, break either above this support, this resistance level at 1223, 1218. These are those recent highs. We were also standing pat and really not breaking below 1192 except for this 1 point right here. Of course, today changes that. And with this kind of a dramatic move down, we're obviously going to table or take the option play off the table, because I think that this is really the kind of move we've been waiting for, to see if we can genuinely begin to break below this point rather than find support in this area as it did on this particular occasion, this red candle here, where you see the low right in here. So the real winner in terms of today's markets once again goes back to the S&Ps. S&P's up about 10 points on the day. Dow Jones back over 18,000. NASDAQ well above 5,000 right now. You can see that we're trading 2,100 and change, 2100.25. We can also see the most recent historical and all-time highs in the S&Ps up here at about 2120. So we're just 20 points shy, really, of the all-time highs in the market. We can see that 2082, there was absolutely, you can see the resistance right in here. Market comes up. This is our record top. And of course, right now, I am looking at potential support in the Standard & Poor's roughly at 2080. It's based upon this 23% retracement level. And the key is that aside from this top here at 2120, we hit these tops here. And in terms of where those tops came in at, let's go ahead and put up an instrument that can give us that information. But 2106 was the high that came in after this record top at around 2119, 2120 in that area. But this is absolutely a dramatic and significant move in the Standard & Poor's vis-a-vis the Dow. And traders, when we look at the market through the eyes of a weekly chart, and that's what this is, the E-mini weekly chart, the one thing that we've talked about in this market is really staying within this channel with support and resistance channel lines drawn in. We've had retracements, but these retracements have been shallow, and the market has continually plotted to higher ground. It's now again flirting with those highs. We'll have to see how that unfolds. We have some jobs data coming out tomorrow. So we've talked about basic significant areas to look for in gold. We talked about the fact that if it breaks below 82, we want to be initiating a short position. Silver's really been different. We talked about this a little bit yesterday. It's been in a downward decline, whereas at the same time we had silver trading pretty much flat and sideways. Now, where could this market go, and what are we looking at? Well, based upon a couple of levels, if you look at these, this support level right here comes in roughly at about 1550. That's going to be the first level that I look at in terms of this market as it comes down. If it cannot hold here, look at these lows down here, and that will provide us with the second level. We talked about this, of course, yesterday at around 1525. Market currently trading 1580. So I think at least should we see this market continue under pressure, you've got a substantial opportunity to see silver go back to about $15 on a short-term basis. And as I said, MACD has already crossed on this market. So we just want to take our trigger from gold If gold breaks at 82, you can initiate short positions in both gold and silver. In terms of stops, though, stops are a little bit more tricky in silver because it is a thinner market. It tends to have more wild gyrations or wild moves between the opening and closing bell, so to speak, and the range itself tends to be a little bit wider than gold, but you're going to need to put your stop really above at least this candle at around 1615 to 1620. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update review. Bye-bye.